Hello and welcome to this video. So I'm going to be showing you how to trade counter trend. Without further ado, let's just get into this. Okay, so clearly from here we can see that the market has been trending bearish, right? You can see the price action here, and then all of a sudden this high got taken out, right, by this move here, right? So essentially this tells us that price, it's now changing from bearish to now bullish. Okay, so when we see this, what do? We expect a pullback, right, before we get that continuation, isn't it? So knowing that the market is about to change trend, when we see this, we know that a high has been taken out, and that means here this is a high that was taken out by this push here. So I'm just going to use this color, right? So we have that. Is that really different? Well, let me just take the blue. So we have that. So you can see that this high was taken out. So clearly price has changed from bearish to bullish. But before price continues the trend, what do we expect? We expect a pullback. For that pullback to happen, what do we need to look out for? We need to go to the 15 minutes to look for a change of character, right? So with that in mind, I'm just going to take this off, this last candle here. Okay, let me make this a little bigger. So you get the gist. So I'm just going to take this off also. So we get that. So you can see this candle sort of closed above this high clearly, right? Yeah, so we get that. Okay, even this candle already took out the high, so we have that. So we expect a pullback before the continuation. That is how you trade the counter trend. Now it's very important to emphasize that trading a counter trend, based on what I'm showing and also based on how I trade it based off the 4-hour and the 15 minutes. Simple. The 4-hour and the 15 minutes. Of course, you can go to the 1 minute to look for additional entry if you want to, but for the purposes of this walkthrough, I just want to show you how to trade the counter trend, of course, using the 4-hour and the 15 minutes. So we have the breaker structure. Clearly market has now changed from bearish to bullish. Let's go to 15 minutes and see what we get there. So here we are. So this is a 15-minute structure, right? So clearly you can see this was the high that was taken out, okay, on the 4-hour. Now on the 15 minutes, we know price has been trending bearish too, and at this point we can see that this high was now taken out by this push here, meaning the price is now ready to trend bullish, right? It's now changing. The market structure is changing. So how do we trade the counter trend? So are we just going to say, okay, now we know that price has changed to bullish? Should we have to wait, okay, to catch the low before, and then we'll continue to follow the trend? We don't have to wait for that to happen. So all we can do is to trade the counter trend, okay, because we know that after a breakout structure there has to be a pullback. Okay, now to catch that, what do we do? Now we look at the time. So this is around 7:15 on a Thursday, 1st of June, right? And let's just draw the structure that we see here. So here, bullish, pullback, high, pullback, and then all of this price action fails to take out this high. You can see that there, right? Okay, so if I just want to draw all the internal price action, you're gonna have something like this. Okay, so this is just internal price action because it's not taking this high, it's not taking this low, so it's just internal stuff. And then we had this high here, okay, and then we had push down here, and then okay, pull up, and then we're actually here. So this is around 5:45, okay, on a Friday. So we know that of course we're not going to be on the charts, we're not trading Asia session, so we'll have to wait for price to sort of take out a significant low or make a new high and take out the low that caused the high before we look for entry. So let me just take this out again, or excuse me, let me just take this and just put that here. Okay, so here we go. So let's do this. So this is 5:45, 6:15, 6:30, 6:45. Okay, so a high rather has been registered. Right now, let me draw something here. So this high has been taken out by this push here. You can see that. So let's just make that a breaker structure, right, on the 15 minutes. So we know that this is the low that led to this high being taken out. Okay, now the question would be, do we need to wait for this low to be taken out before we look for an entry? And the answer is no, we don't have to. And why is that? Because here you can see the price action. We had a pullback here before we had this this push up. So if this low gets taken out, that's a change of character. Okay, by the time this low is being taken out, that's already a breaker structure. okay, under 15 minutes. So we just wait to see if we're going to get a change of character, and then we enter. So let's see what happens then. So 6 foot 5. Okay, 7, price is pushing high. Okay, 7.15, here we go. Okay, cool. Now let's look at this price action here. So here you have pullback, high, low, high, okay, and then fail to close by the body below this guy. So you just have that anyway. So we'll have something like that. So nothing really in terms of structure. So we don't have that change of character yet. So 7.5, and then here we go 8. Okay, so 8 now. By 8 already, you can see that we have something, and I'll show you what I mean by that, because this is really subtle, right? And you have to be clinical in your entry. So we had this high, and then a push downwards, and then another high before the push. So this low, this candle here, not so much of a change of character, but if we zoom in, we can look at something. So we can see that this candle took out this low, right, and closed by the body below it, right? It's just subtle, but yeah, it's what it is anyway. So with this, for me, looking at the time, this is also around London Open, okay, 7:45 or 8 a.m. Okay, so we're just gonna take our flip tool here, draw that, okay, all the way down here, and then with this we can put our entry here, place our entry just right there, and then of course our stop loss will be above, the high. This is about 9 pips, okay, so we could leave that at 9 pips. For security, instead of 9 pips, we could also use 10 pips. Okay, we could use a 10 pip stop loss there for security. Okay, let's not be too greedy, because sometimes price can do whatever it wants to do. Okay, so we have that. So let's see what happens, right? So, and then where do we target, right? Because now we have our entry clearly stated. We know where price is, we know what price is doing, we're expecting a pullback. So where do we target exactly, right? Now, so many persons are going to say, you look at the price action. If you look at the price action, you can see here, this was a spike and then a pullback. This was the low that caused the continuation. So sincerely, that's a good place to say price. We may get price. In fact, look at this candle here. We may get price react. Price can just come here and then react to this candle and continue pushing upwards, because the market is trending bullish so strongly. Okay, and that's what's in a major change. And when that usually happens, we may not get those type of deeper pullback that we really want to get. So we may not get that. So all of these areas here are, reaction zones that price can react to. You can see that. So a good way to trade this really would be to say, okay, when price gets, maybe around this area, or better still, now you also have to be able to, weigh your risk and what you're willing, and also where you are in terms of your psychology and all of that to hold trades. But also we can also target the EQ of this range, right? This low and this high. So if we draw that out, that's going to be something like this. So we can target the EQ here, okay, the middle point here. So with that, I can draw this to this point here, okay. So at minimum now, right? Okay, so we can target that. So with this, we're looking at 1 to 6.18 thereabout. Okay, 1 to 6.8. So with this, we know where price is likely to react to, and we also know where price is likely to target. So it's a pullback that we're expecting. We've seen this, momentum has pushed price, so we expect after break of structure a pullback, and let's see how this plays out. Okay, we're in. Cool. Price is out, and then let's see. And that is it. Okay, so this is around 6 p.m. on a Friday, the close of the week, 1 to 6 in the bag. Simple as that. Okay, now this looks simple, no doubt. In terms of course implementation or making this work, let me just go back 50 minutes. It's harder than it appears. Why? And I'm going to tell you why. You see, we got an entry around what time? This was around 8:15. We got tagged in, but you can see price was retesting the area, okay, multiple times. Okay, even around New York session 2:30, price retested it again. What would have most likely happened for a lot of traders is that they would have moved your stop loss to break even after price moved, around this area. Imagine price was around here and you move your stop loss to break even, only for price to reverse, tap you in or tag you in or tag you out, and then continue in the same direction. So you have, depending on where you are in terms of your psychology, your discipline and all, you of course, you have to be able to manage your trades appropriately. But also something that's also important to identify here or to point out is this. You can see clearly that our entry, we had to be very clinical with our change of character. And the reason why I could trust this change of character here was simply because it coincided with time. It was 8 a.m., it was London Open, and I've seen the momentum. And I knew the price was sort of slowing down. I expect the pullback and price, I could trust this change of character. But if you were someone who wouldn't trust this, you could actually have waited for this candle, okay, to really push downwards to tell you the price is ready to sell off, and then you can now enter and hold until your target gets hit. Okay, so this is essentially it, how to trade the counter trend. What do you do? Number one, let's see this. What do? You wait for a change, okay, for a major break of structure rather. Okay, so this was the high. We had this pullback, okay, and then we had that high, led to this low being taken out. So we had to wait for this to be taken out. When the high got taken out, we had to wait for it to coincide with time, price and time. Okay, London session open, price taking out, the previous high. We expect a pullback. It coincided perfectly for us. And then what do we do next? We had to wait for the 15 minutes to change character. Okay, the 15 minutes change character before we entered. No entry if we don't see what we need to see. Okay, if we don't see the change of character in the 15 minutes, we don't get an entry. It's as simple as that. And by the way, if you trust your analysis, now depending where you are, this was just one entry, 1 to 6, but considering how price was doing whatever it was doing here, let me show you something. We could have stacked this entry. So we had this low here during London session, and then that low was taken out. You can see that by this push here, right? We already had a 1 to 6 entry, mind you. Here we would remove our stop loss, right? So we had this, so we could also have potentially found another entry here. Let me draw that. So this was a continuation, internal eyeballs, right? I believe you know what this means. If you don't know what this means, I have free videos on YouTube that you can watch, or you can of course hop on the course and then you can learn more about all of this. But then we have this, so we can take this high, this candle here, okay, that entire candle, and the low of the candle, I'll just draw that out. So that means instead of just having one entry, we could have secured more than one entry. So 9 pips, just make it 10 pips, okay? And then with this, we'll also target the same area around here, 1 to 6. So in one single day, just Friday, waiting for the perfect setup, we would have gotten 1 to 12. Okay, and if of course if we're risking 1%, that means this is simply just 12% on one single trade. And this coincides with the statistics you see that a lot of professional traders, those who are really successful, don't trade a lot. Okay, you just need 1, 2, 3, 4 trades in an entire month to be successful. Okay, and this trade proves it. So one single trade, you see the breaker structure, it coincides with time and price, and you see what you want to see, and you take the trade. That is how it is, and that is really the secret of how to trade all of this. Okay, so we would have stacked this trade, and then instead of just 1 to 6, would have gotten 1 to 12. But trust me, it's not as easy as it appears, because a lot of traders would have moved your stop loss after this type of movement downwards, and then they would have gotten stopped out again or whatever. Well, if you'd move your stop loss, maybe you get stepped out, but if you're confident you entered again, you'd have gotten that same you'd have caught that move. But essentially this is how to trade the counter trend. Okay, so I want to believe this has been beneficial to you. Please ensure you like the video, share the video so that others can also benefit from this knowledge. We all want to be successful. Sharing is caring, and help others to also discover this, because it will help them on their trading journey. Okay, so I believe this is beneficial to you. I'm going to do another video on how to also catch the low, okay, because we've had the pullback, we know the price has moved from bearish to bullish. So how do you catch the low and the continuation? That will be the next video I'm going to be sharing with you. So cheers and enjoy. Bye bye. Stay stuck in profit. The Stuck in Profit course, of course, is there. If you want to join in, please join the community, and I believe it's going to be, it's going to be really life changing to your trading career as an individual. So cheers, bye bye, and see you next time.